Welcome to S&P Capital IQ's monthly loan market update. I'm Ruth McGavin, a member of the Leverage Commentary and Data team. July has been a very busy month for the European leverage loan market, and I'd like to give you a quick overview of what went on. The total volume of new leverage loan issuance hit €14.6 billion in July, making it the biggest month since July 2007. On the back of this, total loan issuance reached €60 billion by the end of July 2014, putting it well on track to surpass the €68 billion syndicated during the whole of 2013. July was a breakout month for covenant-lite issuance, with volume reaching €4.7 billion. Funds that invest money in the European leverage loan market are being offered a higher proportion of covenant-lite paper than they've ever seen in the past. During 2014 through to the end of July, nearly 40% of all institutional issuance has been cov-lite, compared with 21% last year and just 7% back in 2007. Unless there is a clear change in investor sentiment, this trend is likely to continue through the autumn. Covenant-lite loans are associated with bull market conditions, and another bull market feature that has flourished during July was second lien debt, with €1.2 billion of paper launched during the month. This takes the 2014 tally to €1.8 billion, beating all post-crunch years, although we are still a long way off the $13 billion syndicated back in 2007. Second lien is favoured by sponsors and borrowers, as it allows them to push leverage up. As shown in the table, deals with first lien debt only carried leverage of 4.4 times EBITDA on average so far in 2014. But those with first and second lien debt had total leverage of 5.9 times on average. That's an additional 1.5 turns of debt. Two-thirds of July volume supported M&A activity, including large financings for Chiron IDCS and General de Santé. But private equity sponsors were also busy seeking recapitalizations in order to pay themselves dividends. There were 8 such transactions in the loan market in July, compared with 10 during the whole of the first half of the year. Sponsors have now paid themselves €2 billion in dividends via the loan market this year. The heavy loan supply seen this summer has encountered keen appetite from institutional investors. This was driven by record-breaking repayments, which hit €16.6 billion in the 3 months to the end of July. Demand was also fueled by a healthy queue of managers ramping up new CLOs. Looking ahead, arrangers say there is a busy pipeline in the works for September, with some highly levered buyouts due to emerge. But by early August, there were some signs of weakness in the secondary markets, particularly on the high-yield side, and a number of loans also had to improve terms in order to clear syndication. If the market is to return in the autumn at the same pace it set in July, it will need to be supported by positive investor sentiment and strong demand for assets. This brings me to the end of my market review. I hope you found it useful. You can download the slides at slideshare.net. If you'd like to know more about the leverage loan market, you can follow LCD on Twitter, Facebook and LinkedIn, or you can visit our free websites leverageloan.com and highyieldbond.com. The links are all in the information section on our YouTube channel. Thanks for listening. I hope you'll join us again next time.